Welcome to this week's African Agri Overview. This week we'll be looking at the Zambian maize market with prices decreasing by 15% over the last 2 weeks. Jacques will also look into the potential price trends over the next few months. All in this week's episode, so make sure to stay tuned. Hi, I'm Dr. Johnny van der Merwe and welcome to this episode of the African Agri Overview made possible by Zimmatic Irrigation Systems. Zimmatic pivots and lateral move systems combine high-quality components with exclusive structural designs and innovative features for a long-lasting solution you can count on. The goal of this video is to provide you with valuable information that can help navigate the dynamic world of agriculture on the African continent. Make sure to contact our regular market analyst, Jacques for more detailed reports on the African soft commodity markets. But with that said, let's take a look at the latest economic news. Brent oil prices increased to $91 per barrel due to the ongoing conflict in the Middle East, causing more uncertainty in the global markets, which stoked fears of disruptions to global supplies. The kwacha weakened over the last month due to the US dollar that gained a lot of momentum. Increased global uncertainty means that investors look at more stable investments such as the US dollar. The latest exchange rate is currently trading on 21.5 kwachas per US dollar. The latest maize price in Lusaka traded lower on $312 per metric ton. Soybeans decreased to $414, while the latest soy meal price also traded lower on $414 per metric ton. Wheat prices, however, stayed on its higher level with the latest price on $540 per metric ton. Jacques will now tell us more on why the maize price decreased. Over to you, Jacques.
Good day and thanks for joining. This week we revisit the Zambian maize market. The Zambian maize prices have been trading at a record level since June. However, during the last 2 weeks, prices slipped nearly 15%. With the Zambia harvest complete, it is probably an opportune time to look into potential price trends next few months. Also, we will endeavour to understand government's concerns regarding a potential shortage of maize Q2 2024. This graph illustrates our Zambia annual maize balance sheet for the past 4 years, as well as our 2023-24 forecast, which covers May 2023 to April 2024, the current marketing year. We have not made any significant changes since our last discussion 6 weeks ago. We continue to use the Zambian government's latest production forecast of 3.26 million tonnes and estimate annual consumption at 2.6 million tonnes. We use carrying stocks of 150,000 tonnes and our export estimate is at 600,000 tonnes. We do not expect formal exports of maize or maize meal will be allowed this season. However, given the expected tight supply in the region for at least the next 6-7 months, government will struggle to contain informal cross-border trade, i.e. informal exports, through porous borders to Tanzania, Malawi and the DRC. Substantial volumes have already been informally exported since June to Malawi and Tanzania. We believe informal exports to Malawi will continue short-medium term whenever Zambia prices allow it. Exports to Tanzania has stopped and they should only be back in the import market Q2 2024. This leaves ending stocks at around 200,000 tonnes, a small number for Zambia. Estimates the FRA, government procurement arm, has around 400,000 tonnes in strategic reserves, including carry-in stocks. If our projections are accurate, government will need to distribute at least half their reserves before June 2024. Given the El Nino weather pattern predictions, the FRA might be reluctant to release maize from the strategic reserve before they are confident the next crop is sufficiently large to replenish reserves. All in all, a tight maize balance sheet, but Zambia likely to scrape through to the next crop without importing. The government last week announced they will sell maize meal through ShopRite outlets at 230 kwacha per 25 kg bag versus the current retail market price at around 300 kwacha per 25 kg bag. They endeavour to stabilise maize meal prices. The maize meal will be milled via 3 mills owned by the Zambian National Service, the Army. The FRA will supply these mills with maize at 6,600 kwacha per tonne or $307 per tonne. Observers guess they should be able to supply 6,000 tonnes of maize meal per month at best, which is unlikely to materially drag market prices lower, just not enough volume. Also, most likely small retailers will buy from Shoprite and sell at a profit. I heard a comment, it is rather a political statement that's being made. The announcement did pressure maize prices a little. However, observers feel it is a short-term correction. The lower maize prices of late is sure to see informal cross-border trade pick up, especially to Malawi. Not what government want to see given their concerns regarding supply latter part of the marketing year. This graph illustrates the Zambian maize price history since 2012. Zambian price is currently trading at relatively high levels as indicated by the red circle. However, during the last 2 weeks, we saw prices drop 15%. Our contacts indicate demand from both food and feed millers slower. High maize meal and feed prices have pressured demand. Government's announcement to supply maize meal below the market price also played a part. We get the idea the market now feels the top of the price cycle has been reached. Question is there downside potential from here? We are of the opinion Malawi will remain an importer of Zambian maize when pricing makes sense, which it does at this point. Current export parity to Malawi around $300 to $310 per tonne for eastern Zambia, as indicated by the blue line, which is in line with the current Lusaka price. Prices in eastern Zambia now as low as $280 to $290 a tonne, which should stimulate informal flows. Observers do not expect local prices to slip much below these levels short term, with the affordability factor limiting upward price potential. There continues to be reports regarding the strengthening El Niño weather pattern that normally cause above normal rainfall in countries like Tanzania, Uganda, and Kenya, and below normal rainfall in countries like Zambia, Mozambique, Malawi, Zimbabwe, and South Africa. As more information becomes available in this regard, it will have to be included into our production models. At this stage, the signs of lower rainfall not prevalent.
Thank you, Jacques, for sharing such valuable insights. For those seeking more detailed information and comprehensive reports on sub-Saharan African soft commodity markets, I encourage you to reach out to Jacques Pinaar. These videos are made possible by Zimmatic Irrigation Systems. I'm Dr. Johnny van der Merwe, and thank you for watching.